This conference will now be recorded.
Hey, what up, Trade with Traders? Happy holidays. Hope everybody had a great holiday with their friends and family and was able to get some sleep, much needed sleep.
Yeah, it was a good little break from the market. You think it's different as like traders because you don't really have PTO or anything like that. It's like, oh, the market's going to be closed on a Friday. Oh, we have a long weekend. So it's just taking advantage of the time away from the market. I know I do because the market can be very exhausting, especially this year. There's been so much. So it was awesome being away for 3 days. It felt great, but definitely ready to get back in the action. We got a short week because the market's closed on Friday. No half day this time around. We're going straight through Thursday and then market closed Friday. So 4 more days, baby. We got 4 more days. Josh, let's go, dude.
And we had a great week even on the short week last week where I think a lot of us, we hit XL pretty nicely and throughout it. So, even on these shorts week, it was a real nice week around. But yeah, 4 weeks to end the year. It's been fun. We've had a lot of major accomplishments hit this year all around. Matt and I, one of our personal accomplishments was starting this community. We've talked about this community and how we wanted to, foster a growth-minded community and bring people along and teach people what it really takes to become successful and also just have a more inclusive community. So that's been a real big accomplishment for us. And, I think every single week I can tell that it's clicking for more of you guys. Lots of you guys are having a lot more success. We're having people step up and take personal ownership, and it's really starting to it's getting exciting for me to watch and be part of this community.
Yeah, it's very easy to tell who and I think the vast majority of people right now are in this category, but like the people who are just looking for the handouts and aren't really looking into putting the work. And then the vast majority of people with Trade with Traders are the types of people who Josh and I are trying to attract to our service. And that's the kind of people who they want to learn. They're willing to learn. They're humble. They ask great questions. They accept responsibility. They take ownership for losses, and they understand that it's a process and that it's not a get rich quick scheme. And that's, I think, the most special part about Trade with Traders, just the community and all of you guys, the mindset that we have and the mindset we're projecting for you guys to have, and you guys adopting and adapting to that mindset. So it's awesome. It's really cool.
What's really special to me too is watching seasoned traders, veteran traders, people that I've traded with for a long time who want to be part of our community. They're like, yeah, I want to join up with you guys and share and collaborate on more personal level. So, to have traders who are not just, wanting to have success, but having traders who are already successful and who are having more success because they're part of a community like Trade with Traders is a really good feeling.
It's awesome.
That really goes into what we want to talk about before we get into it. Like last week of the year, the biggest, last week we talked about foundation, building a foundation. And the number one component, in my opinion, to having a strong foundation is extreme ownership in anything you do. And what I mean by that is taking personal responsibility for every decision you make, and not just trading, but in your personal life. But tonight, it's just going to be about trading and what that means in terms of extreme ownership. So Matt, could you talk about when I say extreme ownership, what does that mean to you in trading?
Well, I actually just touched briefly on that. I mean, there's a fine line between like one, and not really, but like being a professional trader and like an amateur, right? And part of being a pro and part of having that mindset of longevity where you can do it for a long period of time, over decades of time, and make it a career is accepting that losing and losing trades and all of that, it's part of the game. It's nature of the beast. But what Josh is talking about with extreme ownership is exactly that. It's like you're not jumping chat room to chat room, service to service, looking for someone to hold your hand, right? You're looking for a place, you're looking for maybe like a roadmap someone perhaps like Josh and I, who can provide sort of an outline of a roadmap sort of and kind of guide you, but like not trade for you, but guide you and help you. And whenever you have a loss or a drawdown or whatever, you understand that it's nature of the beast. It's part of the game, and you're accepting that. You're understanding what to take those losses and build off of them, and what you can do off those losses and how powerful that can be. I think that's what extreme ownership is in trading. You just, every loss, every loser is an opportunity to grow and learn from. And as long as you're owning it and accepting it as your own responsibility, you're going to have success in trading.
I would say extreme ownership to me, I could break down into like a couple categories. Number one category is accepting that every decision is my own. I'm not looking for Matt to make a decision for me. I'm not looking for Matt to buy or sell for me. Every decision I make when I trade, I have to know that I own it. It's my trade. It's my opportunity to either make a winning trade or have a trade where I don't make money off, but I learn. The number two thing about extreme ownership is it goes along with decision making, but it's what I was saying kind of, but in a different way. It's about taking personal responsibility now for all of those decisions. Don't blame the company. Don't blame, Matt or myself. Don't blame somebody you saw on Twitter. Don't blame anybody. Nobody cares about that. Your feelings and you, when you make a decision that doesn't reflect right, that's because we have a nature inside of us to self-sabotage and want to blame others for not reaching our level of success. So the first level is making our own decisions. And then the second level, to me, what extreme ownership means is taking personal responsibility for those decisions and not blaming a company, not blaming myself, not blaming anybody but my personal choice.
To go off that, because that was really wonderfully said. That was beautifully said. I mean, that's exactly what I'm thinking. That's exactly how I approach my trading. I never blame. I mean, shit, if I have a bad trade, it's on me. What the fuck? Like, yeah, there could be a piece of news that comes out and the timing sucks or whatever. But at the end of the day, like, complaining and pointing fingers and like, there's nothing constructive about that. So extreme ownership. But one way, I have like a Twitter metric, like an internet metric, and like, I don't know, maybe call it a gift. I don't know, whatever you want to call it. But like, it's very easy for me to tell just based on conversation with someone. I'll get a direct message on Twitter, or maybe a reply to a tweet, or maybe I'm just reading through a thread or something. It's very, very easy to distinguish between the seasoned pros, the people that have been doing it and doing it successfully for a long period of time, and then the kind of rookie crowd who, there's a fine line between asking questions that are good questions, and there's a fine line between that and just kind of people wandering aimlessly around looking for someone to hold their hand. There's no ownership with that. So it's very easy to distinguish that, for me anyway. Like, I can tell if someone's a rookie or a veteran very quickly, just based on dialogue, just based on how their verbiage or how they're discussing. So I don't know, and this is kind of random also, but like, I just thought of this now, and this is something Josh and I actually did early on. Back when Josh and I weren't making any money, we had kind of a decent sense of the market, but like, we were still very new to it. I'm talking back in like 2014. So like our first like full year of navigating the markets. Josh and I jumped chat room to chat room, just kind of looking for the hottest place to be, who had the biggest picks, and keep in mind, Josh and I were trying to learn, but we were still very new to it, and we still had a lot of questions. There was still a lot of like, I don't want to say hand holding, but like Josh and I definitely would, we did a lot to pick people's brains. We were definitely asking a lot of questions and stuff and looking around. But anyway, I digress. The point I'm trying to make is that Josh and I, after a certain period of time, and it didn't take us very long, maybe 6 months, maybe 9 months, maybe within the first year, we just started kind of like acting like we were these seasoned pros. Like Josh and I just kind of spoke to each other like we had already made millions of dollars. We kind of spoke to others as if like, you know, we were kind of faking it, like we were making it. You've heard that saying before. It's like fake it till you make it. Like Josh, and it wasn't like there was no malicious nature behind it. It was literally just the mindset. Like in our minds, Josh and I, even though we had probably were break-even traders, like we hadn't made any money, we were just kind of faking it until we made it. And if you have that mindset, if you have that level of like, okay, I know,
Sure.
yeah, like what I want to be and like what my goal is, what my vision is, and I act like I'm already there, the universe just kind of catches up to you. And obviously there's a lot that you need to do between those things, but I think just act like you've been there before. Act like you've been there before. Act like you know what you're doing. Act like you know how to take a loss and take the loss. Act like you know how to take a profit. Act like you know how to win. When you have a big win, act like you've done it before. I mean, Josh and I have had scores, 20, 30, 40 stocks this year that have gone 100, 200, 500%, 1000%, scores. I mean, maybe 50. You never will see me get on Twitter and just pound the table and pat my back and jump for joy about, oh, I called XYZ, you know, I deserve 1 million followers, whatever. It's just I act like I've been there before, because I have. And I'm going to continue to act like I've been there before, and I'm going to continue to provide the best setups and the best stocks in the market, as is Josh. So extreme responsibility, act like you've been there before, and just maintain that elevated mindset, and just you're going to be the
We
best.
talked about, I saw, put some tweets out this week about how everybody goes looking for a new system every single, you know, there's people that it's like they're trying to get rich quick. They don't understand the process. They don't take ownership in the process. They get into the markets, and maybe you're there, maybe you're not. I know that everybody's in their own journey. I know we have a lot of successful traders, but I'm talking to the people who don't know what they're doing yet, who have been bouncing around. You know, at some point you just have to take a step back and be like, I'm taking extreme ownership and I'm going to enjoy the process. I'm not looking to make millions of dollars anymore. I'm not looking to make thousands of dollars. I'm just going to learn how to trade the right way. And what I think is important is having a community there that the emphasis is on extreme ownership, not to rely on me. Don't rely on Josh Purdue. Don't rely on Matt Greben. If anybody's out there in any service or anywhere you are in the world and they're trying to tell you that they can have the answers for you, run. What we are trying to set a foundation for in trade with traders, and what we are setting a foundation for, is to help traders understand that they are self-sufficient, that we are trying to show you guys that you can become self-sufficient, as well as take extreme ownership for every decision you make. And that's what's going to separate us in the long run, because we're not trying to get rich quick. We're not trying to. We're enjoying the process. We're taking ownership. We're adapting, and we're moving forward. And so not only are we setting a foundation for us as individual traders, but it's really important for us to set a foundation for trade with traders and what we're about. And this is what we're about. We don't want people who want to get rich quick. We don't want people who aren't taking extreme ownership, right? Like that doesn't serve us and serve our community. We want people who understand that they can be great and who are willing to sacrifice and put in the work and own their decision making.
Well said. And that's the community we're going to continue to build. It's a powerful thing, and we're gonna continue to preach what we preach, and we're gonna continue to try to breed you guys into that killer trader mindset. And I hope you guys are learning a lot, and you're well on your way. Josh, you ready to start breaking down charts?
Yeah.
Let's do it. Hopefully I don't mess it up this week. I think I got it.
Perfect.
Is it up? You got it, Josh? Is it sharing?
Yeah.
All right. So as we always do, I'll start with broad market breakdown. We'll go through SPY. This candle last, so that would have been Thursday, Wednesday, Tuesday. Last Monday's candle was awesome. That was such a good washout. We talk about like the punks and like getting punked and stuff like that. That's kind of what this was. It was just that washout. I mean, we speak about this a lot. Like when you're going toward a breakout, it's really nice to wash out some of those chasers. And that's exactly what we experienced last Monday. If you saw futures, there was a big, like 1, 2, maybe even 3 red hour candles, and then it just completely recovered. And the last 3 days since then, we kind of engulfed up through that. Now we're getting back toward that 370 inflection point. This is still a breakout chart. It's still got breakout potential for a move to 380 plus. Same with QQQ, high and tight. Along with that washout, now we've had those 3 inside days, inside, more inside, followed by more inside. So it's high and tight. It's getting very coiled up here. As long, and I think we spoke about this last week too, as long as we hold like that low 363, 362 level on SPY, we're still constructive. We're super constructive. QQQ, we're talking broad tech. As long as we hold above low 300s, 303, 302, somewhere in that range, we're still super constructive. So we love the high and tight looks. We definitely have our eyes on a couple individual names. I mean, the first one, which you can't ever write off, you can't ever put this one, you can't forget about Tesla. Tesla is the holy grail right now. So right now, the big spot to watch would be that's Thursday, Wednesday, Tuesday, Monday. So last Monday's high, which was close to 670, over 670. And it's weird, this candle here from the day, I think it was the Friday previous. So this candle right here, all the data on the brokerages and stock charts and whatever site you're using, they logged this as a 695 close, and it really wasn't a 695 close. I think the actual close was like 665 or 670. The high of the day I think was about 680 or 684 or something like that. But anyway, that's not super relevant. It's just something to note. But yeah, this one, as it inches back up toward that kind of, I mean, we'll call it an inflection point up there at 670. 700 is still the big breakout spot. So we're going to be observing, watching to see if this continues to remain constructive. Over 700, you would think that this would have a $40 to $60 range, somewhere in that $40, $60 speed up into the mid 700s. So keeping close tabs on it. No concrete strategy in mind right now, because I don't anticipate playing the chop between here and 700. But again, 700 is the big level to pay attention to. Amazon, I talked about a couple times last week. And again, we'll know here in a week or two, but these last 2 candles, not the prettiest candles, but also they're not, I mean, we're still constructive, right? We're still well within all of the trend lines that we've been outlining, that we've been talking about. How did I want to draw this trend line? I mean, there's a couple ways we could draw this. I'll just go from this high. We can kind of do that. So, I mean, we have a break there, but it kind of got rejected. So we'll keep that there for now. But I mean, the emphasis is just on these trend lines. You see the test and the rejection, the test and the rejection, the test and the rejection, the test and then the rejection. And similar to how we got rejected off that top trend line, we've also gotten rejected off of the support. So like here, we tested the support, rejected, bounced off. Tested the support, rejected off the support. And by rejected off of the support, that's really a bullish way of looking at it. You got rejected off of a support. So another way I'm trying to say this is we bounced off of this. I mean, does that make sense? Like, am I saying that the right way? Like, we got rejected here, we got rejected, we bounced, we got rejected here, so we bounced. So it's just converse of the other way that I was saying it. Anyway, my point is that we are coiling. We've got our high, we've got our low, we've got a lower high, we've got a higher low, we've got a lower high, we've got a higher low, lower high. It's getting super tight, and it's even getting super tight if you just look at the last like couple weeks worth of data. So we're kind of in that coil, that macro coil and we've got a micro coil within a macro coil. And another thing I love about Amazon's chart is the weekly. The weekly time frame is just about as coiled as you're ever going to see a stock like Amazon. I mean, it's gorgeous up here. And as far as like a tightening high and tight coil pattern goes, this is just a really solid, sound, constructive look. So the spot that I'm going to watch going forward to hold, I think this remains constructive so long as it can hold above like low 31, like 3120, 3130, 3140, somewhere in that area. I want to see that hold as the low, because again, that would be a higher low. The spot to watch, the big spot, is going to be around 3260. So the high from 2 weeks ago, 3260, somewhere in that area. I think the strategy for Josh and I is going to be to scale in if we break Thursday or Wednesday, Tuesday's high from last week, which was around 3220. 3220, somewhere in that area, scale in, maybe add into this break here. But this has potential to really, really speed up in a quick way if it can bust through this multi-month consolidation coiling pattern. This could speed up to 3,400, 3,500 relatively quickly. So
if you look at the just from July 7th to August like 17th, we have like the same pattern on a smaller time frame, and when it if you put it up, it's literally the same pattern from August 7th to or July 7th to August 15th, and then it ran 11% off of that break. So the key here is just not getting chopped up and letting this thing confirm, because once it confirms, you know, the premiums on Amazon, like we saw it in our joint and my personal, it's really easy to get chopped up on Amazon because of the way they price their options.
Yeah, I probably lost like 5,000, 7,000, something like that last week, just kind of like scaling in. I was never heavy. I never had any kind of size or anything, but literally just 1, 2, 3 contract positions kind of scaling in on my personal account. I mean, I might have even lost more than 7,000. It could have been more like 8,000 that I lost.
Yeah, but one contract, you can lose $1,000 pretty quickly on Amazon. So, you know, really what I want to emphasize, if you're playing it, the pattern's amazing. It's a great risk. It's setting up to be favorable for the bulls, especially with the holiday season, you know, going into Q1. It's very constructive. And so the biggest emphasis that I want to make is just, you know, don't get chopped up and wait for this thing to start confirming. You know, wait for those bullish patterns to wait for the bids to start showing up, wait for the higher lows to start forming. You know, we've got a great consolidation, but if you're too early, you're going to end up losing $8,000 to $10,000, like what Matt said and what I said. I lost a couple of $1,000, you know, scaling into Amazon. So the best case scenario, in my opinion, going forward is just, you know, still being patient and letting the market show us when it's going to go. Because if this starts running, it's not going to be a one-day run. It's going to have a multi-day move.
Yeah. And again, Amazon, when the time's right, we'll know. We'll let you know. But
that's the game plan on it. It's pretty straightforward. You guys see what our levels we're watching for. This is a top watch for us. So if it starts running and we start catching bids, that's when we're going to start scaling in.
Apple, same thing. I just want to see this continue to get that high and tight look, but obviously the 135 break is the big spot. This could speed up toward 140 pretty quick. That recent electric vehicle news could help kind of spark it into early 2021. Obviously, you got Apple sales or whatever. I'm not a fundamental guy. I'm not going to go into that stuff. All I care about is the chart. It's a good chart. That's all I care about. It loses the constructive look I'm observing. I would lose that below like 128, 127, somewhere down here. I mean, honestly, this could even pull back as low as this inflection point down here, which was 125. Hopefully it doesn't. Hopefully it remains in this high and tight kind of structure, but it's got a good look. But my main play is probably going to be Amazon, although I am watching Apple.
It just has the best risk to reward.
Just letting this trade work. At this point, $22 is really the hard stop, but as long as we hold above like 22.5, upper 22s, I'm really just letting this trade work. This has potential to be swung to like $30 plus over the next several weeks, letting this trade work, not tripping over it. FUV is really kind of, I would say, our main watch, one of our main watches this week.
Depending on how it shapes up. So, you know, I posted some stuff on the DD, but again, first off, on every trade that we have in mind, just remember we have scenarios A, B, C. When we talk about stopping out, that's scenario C. When we talk about consolidation, that's scenario B. Scenario A is more of like a move forward. So just understand when we're breaking these down that these scenarios are real. And when we break them down like this, it allows us to act in real time. So or react, I should say. So FUV, we've gone over it all last week. We have electric vehicle stock here. They are, you know, we've got a clear consolidation pattern, risk to reward, and we have an upcoming catalyst in Q1 with some deliveries of their three-wheel electric vehicle car. But on a charting aspect, big level here, 1650, I think. You know, $16 to like 1630, and it's gonna be very clear when this thing starts to push, right? Like if you look at the last time we broke out, we had like you see the volume, you see it's not going to be a one-day move. The float here is about 13 million shares. So to me, we've been this has been getting accumulated slowly, and that's why every time we see it run up or like a little like move up, it gets slammed back down because they're what I'm seeing on the price action and what I'm seeing with the chart is what they're doing is they're still accumulating it. They're just continuing to lock up the shares up here, and that's what my thesis is on it. And I mean, the chart shows the picture. We have a relatively small float in the hottest sector of 2020, and probably going to be one of the hottest of 2021 with the Biden administration. But you can see the dips are being bought up. We're seeing sustained volume on the chart, relatively speaking, and we're nearing a major inflection point. So to me, the buying patterns are kind of similar to what we saw with like BLDP, like the way that they were buying it, BLDP, the buying channels look very similar to before BLDP broke out and while it was breaking out.
Yeah, the volume is staying. So, I mean, like if you're looking at the volume in this channel here, you know, for these several months when it traded in this channel here, it was much, much lower than where the volume currently is up in this channel. So that's also just something to take note of.
It's a big note, honestly, in my opinion. It's a big note that the buyers are here. Like it's really trades very thin. We've seen it, you know, like last Friday, we saw it move from $15 to $16 in about 40 minutes. So, you know, if this starts to break over $16.50, $17, our last move on it was a move from basically $7, $8 to $20. So 150% move. And that was at the inflection point. So the inflection point here would be like $16.50, $17.
That was like a breakout. That was the breakout point. So this is what I consider an inflection point, which would be about $16. This was a breakout here, but
so
this inflection break could easily speed us up toward the breakout point. The breakout point is up toward $19, $20.
Yeah.
If we do hit that breakout point, I don't see why it couldn't speed up another $5 to $10 within a couple of trading sessions. So
yeah, so the market cap on that's 470 million. Just looking at the industry as a whole, you know, they're like Blink. That one had a very similar share structure, and we saw what it did this week. And it had 30 million outstanding shares, the same amount of outstanding shares as FUV, and you know the volumes there. So really, market cap here 420 million. Wouldn't it surprise me to see a move that would take us to about 700 million to 900 million on the next leg up.
Yeah, I was just gonna draw this comparison real quick.
Very, very similar.
Yeah, So kind of a similar little, you saw the inflection, and we were talking about this too, whatever it was 2 weeks back. I remember mentioning the $30 break was that high and tight inflection point, and now we have FUV, the high and tight kind of, it's not really as tight as it is. It had the big move, and now it's digested this move within this ascending channel. So we've got higher lows. It's been what now? It's been over a month. It's been 5 weeks that we've been digesting this 150% move. So kind of similar to BLNK. It had that huge 300% or 250 whatever percent move. It's been a couple weeks, a month, whatever, digesting. It broke that inflection point and then saw a blow off. So that's the thesis here. That's how we're playing this. It loses the constructive look. I mean, as long as this holds like 13, 12 and a half, this can still kind of shape up. Oh, and again, there's no rush. You know, this could easily play out how it does sometimes where, you know, over the next week or two, it just gets a little tighter. And then, you know, 2 weeks down the road is when it goes for the inflection break and breakout. But for the time being, we're watching it close. We definitely are going to have skin in the game. We do have skin in the game. We would definitely add on the $16 break and look for dip strength. But just keep in mind that this one's a pretty low float. So it has a tendency of punking. And you see that in these wicks. You see these big wicks. You see a big upper wick. You see a big wick, a big lower
Even
wick.
to the downside. Yeah, you have the downside wicks. You just have these big.
It can punk. Just keep that in mind. So, you know, play appropriate size, manage your risk, and yeah, good luck with it.
I think FUV, but I think SOLO kind of goes with the same thesis as FUV instead of having to go into both of them. Very similar type of like channel, like it's shaping up as well. And you know, if FUV ran, this is what it would be one of the only ones left that have this pattern that hasn't ran. So in theory, like in my thesis, it'd be like if FUV sparks, then I'm gonna be watching SOLO very closely, or vice versa.
Yeah, SOLO kind of also falls in line with FUV thesis. I definitely agree. You want to talk about XL?
Yeah, so I mean, really, I mean, what we're looking for is to see like kind of what we saw in the last 3 dips. We had like 2 to 3 red days followed by our next leg up. So shorts are,
like this.
I think shorts, yeah, something like that. I think shorts are piled in here. E-Trade had tons of shorts on Thursday and Friday. I mean, I just put orders in for like 10, 12,000 shares and I had no problem. I didn't fill any, but I'm just was testing the waters. So I know it's easily shortable. And, you know, with that type of, and the way that it opened up on Thursday, like the way that it started speeding up from $20 to $28 is what really excites me about this play going forward. If we can kind of like put a nice pattern in here the next, like tomorrow and Tuesdays.
Just think QS, what we did after QS. We had a few days where it just sideways. It washed out chasers and then set right back up and freaking blew off. That's all we're looking for on this. It's nothing super complicated at this point. Look for digestion. LAZR kind of falls in line with that, like kind of like QS theory almost, kind of a similar thesis, not exactly the same because it's not the same exact chart. But really, you know, I'll just keep this simple here. The spot I'm watching for at this point is going to be $40. If it shapes back up this week and kind of climbs back upwards and then retest this $40 level, this is going to be a big inflection spot going forward. If it can break through 40, this has potential to blow off well into the 50s or 60s. You know, it's got that niche, it's got that sector, whatever you want to call it. So this is definitely something that I'm going to be paying close tabs on. I could definitely see me in my personal account adding a few contracts or shares or whatever and kind of using like $30, $31 as my risk. But yeah, $40 is going to be the big spot to watch for over the coming sessions. And this is exactly how I'm going to play it. Buy in right ahead of the $40 break, and then buy some more after the first dip after it breaks 40, and just manage my risk accordingly. If it did end up breaking 40, I definitely would not want to see it lose like 36, 37. But it's definitely still shaped up.
So how I would be watching this tomorrow if I'm entering a position is kind of using Friday's low and seeing how the dips react off the morning open, because ideally we see a green candle going into tomorrow and Tuesday. That's kind of like the trade idea that Matt's talking about. We hold tomorrow's Friday's low, Thursday's low kind of focuses on adding the dips throughout the day.
Yep. PLTR, another one. They're not gonna overcomplicate this. If it breaks last week's high, which is right around 29.5, that's when I would look to scale back in. But it's still super constructive. It's got that high and tight type of look. So last week's high is the spot I'm watching to break. Not gonna overcomplicate it. Not gonna force anything. That's the big inflection spot. CIIC is actually very similar. I mean, almost the same exact concept over last week's high, which is the low 34s. But again, it's got that high and tight kind of look to it. It's got the sector momentum behind it. So it's definitely one that you would want to keep on your radar, because we're going to be watching it closely. So it's one to keep tabs on. And as long as it stays within this channel and continues to tighten up, this is one that we have a feeling that it could present a good trade opportunity here over the coming sessions.
One thing I want to note before we go into any more is I think that going into 2021, for me, I'm sure Matt too, is that a lot of these SPAC plays, these are going to be trading vehicles for us, until they prove to be, until they aren't. So a lot of these stocks are going to be continuing mentioning every week, and a lot of the setups that we mentioned 2 weeks, 3 weeks ago are still stuff that we're watching. So I kind of wanted to go into those lists of those were our SPACs that we're watching right now that we think have the most constructive setups, but stuff that we're still that we still have our radar that we are waiting for set up again, is something like THCB, RMG, IPOC, IPOC, STPK. I mean, these are all stocks that we're going to continue trading and continuing to play their setups as they come out for us. But that's just something I wanted to note about SPACs and how we're playing them.
Yeah, so THCB, another one, we're just this is scenario A, where we have in mind just a few more sessions of red sideways, set this back up, similarly to kind of how PIC set up. So kind of how PIC was set up down in this range here, which again, if you remembered our videos from back here, we nailed this. I said exactly what I wanted to see. It played out exactly to the T of my scenario A, and you see what that one did. So that's kind of what I have in mind for THCB. So no rush. LAC, the big inflection spot is last week's high, 13. That's going to be the big spot to watch. I love the macro trend. I obviously everybody's raving about lithium and lithium stocks right now, so it's definitely one to keep tabs on. Ideal scenario A would be a few more days of sideways, consolidate this move. It went $9 to $13. So the ideal scenario would be a couple more days of sideways, red days to digest that move a bit, and then we can go for that $13 inflection break. But yeah, it's a good macro. It's a good macro setup. I'm keeping close tabs on it. And again, once I get a better feel for how I'm going to make the trade, I'll let you know. But for now, just $13 is the spot I'm watching. DSGT, this is an OTC stock. So again, higher risk involved with these ones, but It's got that high and tight look going for it. I wouldn't want to see it lose like 50 to 45 cents. I wouldn't want to see it lose the lower end of last Wednesday's candle, which is this red candle. I don't want to see it lose the lower end of that. But this chart's got this chart still has a lot of room. I could definitely see this chart. I could definitely see this stock being like a $1 to $2, $1.50, somewhere in that range, like up here. I could definitely see making that kind of move, but I'm definitely going to be upper to mid 40-cent range as my stop. That's kind of where it loses that constructive look, that ideal scenario A look. That's where it would lose it. But other than that, you know, I'm kind of, I have shares. I'm just kind of trusting the trend there. I've got a couple more that I just want to briefly mention. Nothing too crazy to talk about. This OEG up here around 1.6, 1.7. That's kind of the inflection spot that I'm waiting to see if it can break through that. But you know, it's one of those the $1 to $3 range stocks. They always seem like if they digest those initial moves from lows, if they digest those moves for long enough, they can have serious follow through moves. So that's kind of what I'm watching for here on OEG. Kind of similar is OPTT. The inflection spot is going to be through last week's high. You see it's just been following along this trend. And as long as it continues to digest within this channel, I mean, it stays really constructive above like 2.7, 2.8. As long as it can stay above that, it's still got a real constructive look to it. And I'm going to be watching to see if it can go for that $3.50 break. Last one we'll mention, actually, I guess we have one more, but this TIGR, again, game plan for me is going to be used last Thursday's low, so 650, somewhere around 650. Use that as my risk and scale in. Use that as my risk and see if, you know, that's kind of the bottom. If it's not the bottom, okay, I'll be a little more patient until it does put in the bottom. But you see this $8 spot, that was the big break. It went for that last week, has since then pulled back and digested this move. So it went from $5.50 to $8. Now it's kind of digesting that move. But you see this $8 spot is a big break. So regardless of if I end up scaling in and catching bottom on this pullback or not, we're definitely paying attention to this $8 break going forward, because I can see this speeding up to $10, $12 relatively quick.
Yeah.
Again, that's TIGR. And then the last one I'll mention is this TPGY, another SPAC play. This one actually had some of the nuttiest action out of all the SPACs that we've seen recently. Really, actually kind of ever. This is really an anomaly as far as SPACs go. I mean, this SPAC, upon an initial announcement, this one gapped up from $11 to $26, $27. It faded off into the gap a little bit, found its footing, recovered, came back, broke the we'll call it the IPO high, even though it's not an IPO, a traditional IPO. We'll call it the SPAC IPO high. It broke through the SPAC IPO high, did a little more, and now it's kind of cooling off a little bit. But yeah, I mean, this is one of those plays where the volume's there, the sector, the niche is there, the momentum's on our side. So as long as this holds like 28, 29, somewhere in that range, and if it can just kind of digest similar to what I'm drawing, this is kind of scenario A, obviously, and then it can kind of curl back up and go for those inflection breaks. This is definitely one that wouldn't surprise me if this one could blow off into the $50, $60, $70 range, something like that. Again, I need more chart data to be confident in that thesis, but I'm going to be watching it closely. But this is like the very tentative game plan thesis on this name. There's a lot to like. $28, $28, $27, somewhere in that range. That's where it remains extremely constructive for me going forward. Josh, do you have anything else to mention?
Yeah, IPOC. The IPOC merger date vote is the first week of January, so next week. And if we get a nice pullback on this, I mean, I'm definitely interested. The volume's there. It's starting to open up. would just love one good like 2 to 3 day consolidation. This is going to be a top focus for me going into this week for the first pullback. It doesn't have to be tomorrow, it doesn't have to be Tuesday, but when we do get a pullback, we're going to get a pullback prior to the merger, and that's what I'm looking for on IPOC.
Cool. Yeah, I think we got a solid game plan going into the start of the week. Remember, it's a short week, so as always, be selective, be patient. Don't assume your first buy has to be the last buy. You know, if there's a super bullish setup, there's a super high confidence setup, scale into it. Don't go all in on your first trade. Scale in. Allow yourself to add on dips. Once it breaks out, give yourself some wiggle room to add in on dips. Be confident in the trade. And last but not least, don't just blindly follow what Josh and I are talking about. Build your own strategy, have your own game plan in mind, manage your risk, manage your capital. That's all up to you guys. This is us providing the roadmap, how we see things, but now it's in your hands. How you execute on these ideas, that's totally up to you. So,
and one thing that I've thought of recently was sometimes we have a lot of stocks, and the reason we have a lot of stocks sometimes is we have 2 people. I can't manage all of those stocks if it's just me, Josh Purdue, trading. So, you know, limit your selection down. Like, I'm not going to be trading all those stocks mentioned. Some of those stocks Matt's going to be focusing on in his personal, and some of the stocks I'm focusing on my personal too, like in the joint. But I'm saying that we have different focuses, and just because we talk about something doesn't mean that I'm going to trade everything that Matt likes, and he's not going to trade everything that I like. So you're getting to hear perspectives from both of us and what we are looking for, what our game plans are, and doesn't mean that he's going to trade everything that I talked about tonight, and that doesn't mean I'm going to trade everything he talked about tonight. And just because we're talking about it, that doesn't mean you should trade it. So
I am part robot though, so I do manage to hold more positions than I can manage it a little because I am part robot. But yeah,
yeah,
I put more energy toward the top 3, no doubt about it. My top 3, 4, those are where my energy's going. If I'm holding 15 positions, I'm not putting the same energy in the other 12 positions. I'm not putting the same size in the other 12 positions. You know, they're much more micro managed than the top setups. The top setups, that's where your energy goes. And if it's a swing setup and it's a high confidence swing setup, trust your gut, let the trade work, it'll do its thing.
Yep. So final week of the year, let's all take ownership of every decision we make this week. Let's work together. Let's help each other out. And, you know, with that, we'll kill it. We'll have another great week. We're leveling up every single week. We're laying a great foundation to what it takes to be a trader. And kind of think of this as a series. This week's series, like, let's just say the foundation should have been week 1, and the second foundation was leveling up. And now we're talking about extreme ownership. So these are all important qualities to becoming a successful trader.
Oh yeah. All right, that wraps it up. I hope everybody has a great Monday, a great week, short week. Let's kill it. Let's end the year strong, guys.
All right, take care, everybody. See you on the chat.
Peace and love.